How you doing? This is George Senda, the guy from Pittsburgh. Well, here's this morning's question. Are we headed for a deflationary economic collapse? Well, two experts think so. Royal Bank of Scotland has advised its investors to get out, that everything is going to collapse, and to sell everything but high-yield bonds. And today, Albert Edwards joined RBS in warning of a new crash, saying oil price and deflation from emerging markets will overwhelm central banks, tip the markets, and collapse the Eurozone. So it says here, are the doom makers right? Are we headed for a big economic fall? The City of London's most vocal bear has warned the world is headed for a financial crisis as severe as the crash of 2008-9 that could prompt the collapse of the Eurozone. Albert Edwards, strategist at the bank Societe Generale, said the West was about to be hit by a wave of deflation from emerging market economies, and central banks were unaware of the disaster about to hit them. His comments came as analysts at Royal Bank of Scotland urged investors to sell everything ahead of an imminent stock market crash. Developments in the global economy will push the U.S. back into recession, Edwards told an investment conference in London. The financial crisis will reawaken. It will be every bit as bad as 2008 and 9. It will turn very ugly indeed. Fears of a second serious financial crisis within a decade have been heightened by turbulence in markets since the start of the year. Share prices have fallen rapidly, and a slump in the cost of oil has left Brent crude trading at barely above $30 a barrel. Can it get any worse? Of course it can, said Edwards. And the strategist said the U.S. economy is in far worse shape than the country's central bank realized. We have seen massive credit expansion in the U.S. is not for real economic activity. It is borrowing to finance share buybacks. Edwards attacked what he said was incredible conceit of central bankers who had failed to learn the lessons of the housing bubble that led to the financial crisis of 2008-9. They didn't understand the system then. They don't understand how they're screwing up again. Deflation is upon us, and the central banks can't see it. The dollar had risen as much as the yen had in the 1990s, Edwards said, an upwards move that pushed Japan to deflation and caused solvency problems for the Asian countries' banks. He said that a sign of the crisis to come was the collapse of demand for credit in China. This happens when people lose confidence that policymakers know what they are doing. This is going to happen in Europe and in the U.S. Europe has shown tentative signs of recovery in the last year, but Edwards said the efforts of the European Central Bank to push the euro lower and growth higher would come to nothing in the event of a fresh downturn. If the global economy goes back into recession, it is curtains for your eurozone. And stock markets had a respite, but this morning the markets are down. And the oil price is down, and gold is going up. And this warning from 2015 by Chris Martinson, the signs of deflation are flashing all over the globe. In our estimation, the possibility of an associated financial crisis is now dangerously high over the next few months. As we've been saying for a while, a preferred model of how things are going to unfold follows the kaboom theory, put out by Eric Jansen of iTulip.com. The theory states the Afghan debt bubble will burst first by deflation, the ka for explaining to the in hyperinflation due to additional massive money printing efforts by frightened global bankers acting in unison. First an inwards collapse and an outwards explosion, kaboom. We've been tracking the deflationary impulse for a while and declared deflation the winner back in July of this year. What do we mean by deflation? Back in 2008, the central banks of the developed world as well as China had a choice. admit that prior policies geared toward encouraging borrowing at a faster rate than income growth was a horrible idea, or double down and push those failed policies even harder. As we know, they chose option 2. Here we are 8 years later, nearly 60 million in new debt on top of the prior amount, and GDP grew by only 12 million over the same period. 12 trillion, sorry. And instead of saying to ourselves, it's probably a terrible idea to pile up debt at two times the rate of income growth, with the world debt is double down on that terrible idea and pile up more debt at 5 times the GDP growth. So that's my question. We're seeing the market down this morning, and Standard Chartered says oil poised to plunge to $10 a barrel. So what do you think? Is the economy going to be good in 2016? Or are we headed down the roller coaster of deflation? And Obama's speech and the administration saying the economy is fine, will that prove to be a lie and mean that the Republicans will win the White House in 2016? All right, have a good day. I'll be back later. Bye-bye.